joins us now. Art, it's starting to feel like that 1970s feel. You see violence erupting in cities, more and more talk about stagflation. You were there. You understand how deleterious it was to America. What are your thoughts as you look back and look at what's happening right now?
Yeah, it's funny you should say that, Charles, because yesterday on Larry's show, I did talk about Jimmy Biden or Joe Carter. I don't know which it would be, but it does smell and sound very much the same. It has a lot of it. Now, just make sure, it's not day by day, hour by hour, week by week. Things will move up and down. For example, that jobs report that was so bad, I'm sure it's going to reverse itself somewhat. And likewise, the inflation number that was so bad will reverse. But there is an underlying problem here, and it is a malaise that's coming back to America, as Jimmy Carter said. And it's all because of the policies that are being proffered by the administration and by Congress. And it will have the same deleterious effects on the U.S. as it did back then. Higher taxes, they're no good. Energy, trying to reduce energy. Do you remember what Jimmy Carter had there, Charles? Remember the gasoline lines, all that, because they sold gas below cost? Mm-hmm. And then they had the excess profits tax on energy companies. They had the wellhead price controls. All of that destroyed the energy sector. This guy's shutting down pipelines. He's doing all he can to destroy carbon-based energy. And if you look at the taxes, Jimmy Carter tried to do the higher taxes as well. It's very similar, and it will have the same effect. And by the way, the politics will be the same, too. We'll get Ronald Reagan in a couple of years again.
Yeah, and, I look at that, and, I lived in New York at the time, and, I lived in Harlem at the time, and, I think about the violence, and I'm looking at all these numbers that are spiking across this country. I think there's a certain sort of confidence that has to emanate from the president, and I understand that Joe Biden was able to win the presidency with this more of a negative tone, and I think he has to stay negative. The notion that we're in an emergency to pass another $4 trillion in spending, but I feel like it's backfiring, and I do worry about the overall pulse. Just saying "Morning in America" with the confidence that Ronald Reagan did actually helped to make it a self-fulfilling prophecy.
Yeah, I'm not sure I agree with you on the words being really any different. I don't think words matter. I think deeds matter. And what Ronald Reagan did when he took office, firing the air traffic controllers, threatening Iran. I mean, Iran returned the hostages. Now we want to go back into a deal with Iran? Hello? And then also what you saw there in the tax cuts and all the other stuff that he did. I mean, the deregulation of energy. This guy's regulating energy. He's doing everything in the wrong direction. And it won't work now, and it didn't work then. And, the people are going to have to, unfortunately, suffer a lot in the interim because of these bad policies. But our new era came in 1978 with the capital gains tax rate reduction called Steiger-Hansen. That was the beginning in 1978. And then you got the Reagan tax cuts, the deregulation, and the boom. Oh, my heart beats loudly, Charles. Can you hear it all the way across the country?
I can hear it. I can hear it. Let me see how much it beats when I ask you about modern monetary theory, because, I had a really brilliant guest on the show, Ed Yardeni, who said that China and Japan have more or less done this, that they're doing it, that China went from $5 trillion to $25 trillion, created the strongest growing and fastest growing economy in the world, and that they really have little inflation as a result. Is it avoidable that we're going to go down that path over the next 4 years?
Well, let me just say that all the Fed's actions and all the big stimulus spending that has been going on, really what it does is it puts purchasing power in the hands of people who don't work. And it puts it in there to people who don't work, and they're required not to work. Then what it does is it taxes people who do work. So what you're going to do is get a reduction in the supply of goods and services, and a huge increase in the purchasing power of people who don't work. And if you have a bigger demand for a product and less of a supply, my guess, and I'm just a wild one here from Econ 1, prices are going to go up, Charles. And that's what you're going to see if this continues. Now, I don't know how long it's going to continue, but now I'm talking real prices, not dollar prices yet. But when you see all these other things, we don't have a gold problem yet. We don't have a 10-year bond yield yet. We don't have a U.S. dollar problem yet. So the real big inflation is not here yet. But we do have spikes in these relative prices and shortages of goods, and that's no good for the country.
Well, Art, it was fantastic going down memory lane with you. And I love that you gave it to us straight. It may be a tough couple of years, but the midterms, maybe we can start to turn it all around. Art Laffer, thank you so much, my friend.
Yeah. Thank you, Charles. My pleasure.